Hey guys, welcome back to another lesson. In this video, I'll be teaching you how to identify different type of trends like uptrend and downtrend and also ranging markets. This is to identify, when there is a breakout coming and how to take proper entry, how to draw proper trend lines so that you always buy low and sell high. These kind of stuff. So let's get started. This is going to be a very important video for you guys because I'm going to cover a lot of things that I know and is not normally seen in a lot of videos. So let's do it right and make sure if you don't understand this concept clearly or anything, just watch again multiple times. And if still you don't understand, you can then comment on this video. I'll see a way to teach you in detail. So in the previous video, we covered lower highs and higher lows and everything. Yeah, so let's look at Euro USD in daily time frame. So you to catch a trend or to understand a trend first, what you need to do is you need to see the market in a broader perspective. You need to understand what kind of structure the market is doing, the pattern the market is following, so that it's clear and visible to your eyes that if the market is in a trend. So for the market to enter or exist in a trend, first I need this important thing. You need to have at least two higher lows formed. What I clearly mean is that the market needs to form multiple higher high and higher lows. Because if the market is forming, a higher low, a higher high, and then a lower high and a lower low, then it's very difficult for a trend to exist. So if we are looking at a daily time frame, we need to see what kind of structure the market is building. So in this structure, we can see the market is going like this, but the problem is this trend cannot exist. Like if you try to draw a line from year to year, this isn't a trend, right? If you try to draw a line from year to year and then you see there is some kind of trend showing up, but this is not happening anymore. Let's see right here on the daily time frame, the candles are moving like this, but let's move to, let's say, 4 hour time frame. Yeah. So we see some kind of structure, is already moving. But is it in a trend? So this was in a trend right here, I guess. You can see the market use this line a lot of times as support. So first what you do is you create a rough line so that it's clear how you need to make these lines. And you need to try to touch as many higher lows you can, the swing lows. So you can see one touch, second touch, and then there is three, four, almost four, right? And then we have this five. So this market was in a trend right here. And if you see there's like once, twice, and thrice. After this, we got multiple opportunities. You got an opportunity right here. You got an opportunity right here. And then there was an opportunity right here to buy. Okay. Then market gave a break of structure and then it continued down. Okay. Then again, the market right now is looking like this. This is a 4 hour time frame. Let's look at it in 1 hour now to see if there is a trend on a smaller time frame. What I see here is that I can see a line coming from this, this. Yeah. So if you see smaller trends, now even these are very big movements. We can't say that this is a small price action. You can see the price came here, touched here, again moved here, then again touched here, rejected right from here, right on the trend line. So first you need to see that how many times this is happening. You can just create a trend line like this, create the lower touches, and when you see like once the rejection is happening, twice it happened, thrice it happened, then of course there is a trend going on here. And the fourth time you could have entered, the fifth time you could have entered, so many times. And this one actually I didn't catch this, but this one actually gave a good entry signal as well. So on 4 hour there is an entry signal, on 2 hour there is a reversal pattern and a very good entry signal. I would count it as an entry signal. It's eating a lot of candles. First of all, it's a nice price action. Imagine you buying a trade right here. This has happened today at 9 a.m. around pre-London session, a lot before, like 1 or 2 hour before. And like a 22 pip stop loss, and the price has already moved 1 is to 2, and it might move more. So this could have been a very simple day trade and a very nice one. So price did give multiple rejections on the trend line, and this is how you draw a trend line. How do you draw the upper line of a trend? So what you do is you just copy this and you paste it. Now you have to move the line right here. You can try to get as many touches as you can. So if you see there is some kind of rejection here, there is one rejection here, there is one rejection here. I try to keep it the same angle as we have for the bottom line. Reason being, you will find this line to be used in multiple places. For example, right here where it's placed, look at this. This is also a rejection level. This is also a rejection level. This is acting as a rejection level, right? So the market has used it as a second support zone. And if you see, the price has once crossed this, it is trying to reject, but it didn't come near this line. Even there was this rejection right here on the line. There is a rejection, the price is trying to move down, there is a rejection on the line. So I don't know how this is handling this, but this is all connected with people, right? There are emotions playing out here, and this has acted as a support zone. So a lot of traders are already using these lines to enter or sell trades, and that's why you see, a green candle right here, a buy pressure right here, people trying to buy at this point, because this trend line is not just us creating it. There are people who are already using it. It's as simple as that, right? And this line, when we just move it here, there is almost one rejection right here, there is second rejection right here, and there is third rejection right here. Imagine the price came up till here and then it rejected from this line. And the reason behind it is the same thing. So many people are using this line to take a trade, to enter short positions. These two candles are already big, right? And as soon as this line was hit, how many traders entered the trade and they shorted this position? Of course, there is a lot of institutions actually entering here and selling from this trade. It was a liquidity level. Once the price moved down, a sell trade from right here would have given on smaller time frame 1 is to 2 or something like that. You see there is a clean structure. Now on 1 hour there is a reversal pattern right here on the trend line at the right place you need it, and there is a 1 is to 3. Imagine such simple trades do exist in the market. The only thing is right now even I won't be able to catch most of this trade. Sometimes you do, because I already have a lot of markets already in place and I'm not always looking at so many charts. But these type of positions occur every day, and it's just whether you have the eye to catch that. Just don't catch too much, because then you might be, seeing trade everywhere. That's also a problem that beginners face, that they see trades everywhere, which is not a right thing. For that to exist, you need to have proper trend lines and proper trends and proper rejection levels. You can see these are rejection candles. The sellers came here. You should see these kind of price action where you can see human psychology. Here you see human psychology. You can see the human behavior. You can see a lot of sellers were here, but a lot of buyers came right below this trend line, and buyers pushed with such a pressure that so many candles were engulfed. Imagine that. There is around 10 candles here or more than that. All of these were engulfed with this buying pressure. Look at this. A lot of sellers came in again, and all of that selling pressure was eaten by the buyers, and the next candle moved larger in size, right? So even though the price came back right here, even though you would have entered, your stop loss would have been here, the price still moved up. It didn't hit your stop loss if you would have entered right here, right? And the price moved nicely up. It's almost 1 is to 2 anyway. So this is what you want to see at your trend lines. I hope you are able to understand this and how to draw trend lines. I will be creating more. Now let's see this level, okay? You can see trend lines in smaller time frames. You don't need to have So of course I'm a swing trader and I'm fine with taking day trades, but I don't go with scalping. I don't do scalping, but a scalper would see a trend like this. Look at this downtrend. Now let's try creating lines. So in a downtrend, you will definitely want to be shorting the market. This looks nice to me. Let's try to connect more. Improvise this. The goal is to cover as many lines and the lowest rejection levels. Okay. Now we have this trend line. I'll copy paste this and move this right up here. I see how many rejections are there. Okay. Yeah, this looks better. Now imagine how many trades you guys can take on such a trend. Let's say you didn't enter here, you didn't enter here, but could you have entered here? Could you have entered here? Or could you have entered here? There were so many opportunities, right? So market does give you opportunities. It's just you have to catch that. Imagine entering on this trade, shorting from right here and price going till here. Anyway, you don't have to be in that kind of trade. Let's move this to 1 hour and see what kind of price action was here. So again, a reversal pattern right here. And even if you didn't catch that, let's say the 1 hour was bearish here. It went bullish. No, not even bullish. It just moved down here. And then it created another pattern and just moved down. So even if you entered here or here, it's fine. Let's say you entered right here as a day trader or swing trader, right? You still covered 1 is to 2 right here. You don't even have to go till there. You covered 1 is to 2 in 1 hour right here. Imagine that. That is how you want to trade, and that is how you want to create trend lines. It's just right now we are creating at history. You need to understand when you see two trends happening like this, there is a point, there is a point, there is a point. Trend is happening. Just create your trend line. Okay. From here, you can see from here to here, you can draw a line. You see a peak, draw a line, continue the movement. You will see another rejection right here. You see another rejection. You see a break of structure, kind of a small break of structure happening right here on smaller time frames. And you sell from right here. And you are ready when the price is coming back again right here. Again. And even if you didn't close here because it was below the trend line, right? So anyway, your target would be 1 is to 2 at least. So targeting 1 is to 2, you know that market will come here at some point. You will keep 1 is to 2 right here. Okay, and you have to set and forget. 1 is to 2 right here. And the market, let's say even if the market didn't hit right here and then it came up, you enter second position right here. But make sure you have to keep enough space between your trades. It's very important for you to have space. So when you see rejections from the trend line and then you see an engulfing, a very good rejection from the trend line, this is the place to enter on 2 hour. And this is the high. You covered it. 2 is already here. But imagine 1 is to 3. So a lot of opportunities you get when there is trend lines and when there is a trend going on. So I hope this is clear how to create trend lines when you have to catch that how this is happening, how the market is moving. Is it moving in a trend? Are you seeing higher high, higher lows? Are you seeing lower high, lower lows? And is there a trend in existence? See, this is also a small trend. I can easily see a line connecting. It's very easy. A line connecting right here. Now you might not take a trade right here, but you can easily take a trade right here. Now this is 2 hour time frame. On 1 hour it will look much better, and the slope is already nice. It's going to give you 1 is to 3, 1 is to 4 kind of risk to reward. That's nice. You can see a trend right here. So 1 2, and then you draw a trend line. You get an entry right over here. Your TP is right around here. And market does move in a trend. See, the market is going in a trend downside. Market is moving in a trend. Look at this line. How it's moving. Look at this. You just need to make those trends. Look at this. Now imagine you're catching this kind of trade, selling from right here. Wouldn't it be nice to sell from right here? So I know it's very small on your screen, but I have to see other trends as well. Let's say you entering on a reversal and there is a trend line covering a good distance. 1 is to 2 again, almost 1 is to 3. Now this was a breakout kind of stuff, right? But it didn't happen. It came back. So a lot of traders just trade based on trend lines. Like a lot of traders trade based on higher lows and higher highs. They mainly trade how much retracement has happened and use support and resistance lines. I mainly use support resistance for trading and trend lines for trading. These two stuff. And I have seen traders who only use trend lines for trading. Now, let's also look at a ranging market. So, ranging market, I think I have seen in USD, JPY. Yeah. So, look at this price action. On the daily, what we see is so on every time frame, things might look very different. On this daily, it's more of looking like consolidation, but not as a clear range. But let's shift on 4 hour time frame. And now it's kind of looking some kind of a range, but still it's not very clear, right? So what do we do is let's drop a line, a resistance line. Okay, let's make it look nicer. Now we have a resistance lines right here. Now let's drop a support line. So when you see this kind of price action, you have to try dropping this kind of lines for you to understand what's happening in the market, so that you see in a very nice clear way whether market is ranging or not. So now when we have these two lines right here, isn't it very easy to understand what's happening in the market? It's ranging, right? Now let's move this, let's add more lines. You see, this area has acted like a lot of rejections are happening right here. So the lowest rejection point is this. This is where you wait for price action to change and enter. It's acting like a support zone and then goes up, the price goes up. For example, this area, the price moved up, retested, went up. The price tried to go down but rejected from a normal minor support area. Even though you see a lot more rejections right here, this is the most liquidity level where a higher buying pressure comes in, and this is the point where a higher selling pressure comes in. And this mid areas are where a normal buying as and selling pressure comes in. So when the price hits these levels, the chance of going high is better. A lot of buyers are around these areas. That's why they take the price beautifully up. But fundamentals also come in, and there are a lot of news during the week. So that also drives price action. But this is what we do. This is how we analyze what kind of price action is happening in the market and what kind of trades you want to enter in. Let's say you see there is a support line right here, you see there is a support line right here. Now if you see a lot of rejections from right here and price turning, and see a, on 15-minute or 30-minute there is a change of structure. In previous video I have taught you how to identify change of structure and everything, how to identify trend, how to identify higher low and lower highs. Now, based on that, let's say on a lower time frame, on 15 minutes or 30 minutes, you see a change of structure at this line. Now, what you have to do is you just have to see two things. A change of structure, you already have confluences of support resistance line. You know the market has tested this level a lot of times and rejected it, right? That's your confluence. Now you have a smaller time frame confluence that the price has changed the structure. You have a higher time frame like 1 hour or 4 hour confluence that the price has rejected this level already, and then following you have a structure change. So what do? You have so many confluences that builds up a high probability trade and a trust where you would know that even if it hits your stop loss, you did all things right. It's just that it was not meant to be. It's just about win rate. So let's say if you have a 50% or a 60% win rate, your trades 4 to 6 times or sometimes even 10 times are going to give you a loss even when everything is right or you have followed all your strategy and everything. You need to make sure you understand this shouldn't affect your psychology. Okay, if you did everything right, you analyzed everything right, and still it hit your stop loss, it's completely fine. Okay, it's completely fine. And second thing, if the price moves towards your end, towards your side, don't try to cheer yourself. Let's say I have seen trades move from, let's say my target was 2.0 and the price has moved to 1.9 a lot of times. Even last week it was. My price moved to 1.9 and rejected from right there. Rejected from right there. Like a point 0.1 distance didn't hit my target and came back to my break even. Now, I was not cheering myself that much so that I would be in pain or some kind of psychological disturbance because of this, because I know this has happened to me a lot of times. I don't cheer myself at all, even if the price has hit the target. I just know that this is kind of a thing I do. This is more of a job or a business where your trade might sometime hit the target and it might not. The only thing is you need to know your win rate and you need to make sure you are actually capturing at least 1 is to 2, right? So even if your trade is going to 1 is to 1, don't cheer yourself. The reason behind it is, imagine, let's say you are risking $1,000, you just made almost $1,900, right? By going to one, your trade just went to 1.9. You can now see $1,900 on your MT5 account, right? Now the trade started retracing and now it's at 1 is to 1. You will feel that pain and that psychological disturbance I was talking about. You will not feel it, like you won't be cheerful. In fact, the more you cheered, the more painful it will become for you to see how the money is, almost going. You almost had that money and now it's retracing. And when it hits your break even or your stop loss, imagine $1,900 going to zero or minus 1,000, right? I don't even, think about this now when I am in the trade because I don't cheer myself. But I have been on that side and I have felt that pain. And because of that, I have made a lot of mistakes. I have made plenty of mistakes because of this stuff. So don't cheer yourself at all. Just, do it like it's your work. Enjoy your life in a different way. Trading is something which shouldn't affect you mentally at all. Even if you're successful, even if you're, failing, just be humble. Don't need to talk about this so much with people because no one is going to understand you. No one is going to take trading seriously. Even if you tell your friends, even if you tell your parents, most of the time they are not supportive, right? So what you have to do is you have to make sure you are mentally prepared for all of this. You need to make sure you follow your rules and that's it. No need to cheer yourself. Don't get happy on $1,000 or $2,000. It can easily go away. The very next trade can do that. And if you see slippages, it can take more than $1,000. So make sure you always put your stop loss. Okay. So that was a little note about psychology. Now, this range is done and you see how support is acting up. This is how you detect range, how the range markets are going on. Now, how do you detect breakout and how do you enter breakouts? So there's a very simple way. Now look at this. There is a breakout right here. Even though the price moved back, doesn't matter. You see the price breaking out from right here. And now let's look at this on 1 hour time frame. So always when you see support resistance, let's say on daily, then you take trades on the lower time frames. Now you're checking out the support resistance on 4 hour. So you need to find your trade on a smaller time frame. So now what I see is that the price did a breakout and then it came back, retested this level, and then I see a very strong engulfing. So I'm not so much interested when one single candle is doing a lot, because I know my first target would be this, because there is a liquidity area right here, and then the second target would be this. So I don't know where the price actually moved. You see, it almost went till here. Okay. Now, if that is your target, imagine you entering on 1 hour right here, and it's a really nice engulfing. Sorry, this was the trade, and you cover your low, right? Sorry, this is too much, right? Almost here, and this is not even 1:2. So now let's look at more smaller time frame, because we just saw this on 4 hours. So this would act more of a day trade. So I do take day trades, but it depends what kind of structure I'm seeing, whether I'm prepared. So this was not an entry at all. You can see the 30-minute closed right here, and then if it is not giving me 1:2, I can't enter that trade. If it is not giving you 1:2, don't enter. It's very simple, right? Now let's look at 1 hour again. I like to enter at 1 hour because that is much better confirmation, and it gives me a clear mindset over whether how the candle has closed. So 1 hour is closing again right here. I don't think so. It's again giving us 1:2. So I'll keep it right here, covering a little low from this area. Though this is main, but you can see the liquidity happen right here. So a lot of times price would change from right here, flip from right here or around this area, just below. Again, 1:2, we don't get the trade. But this is how you do it. You have to see what is your target first. Okay. What is your max target you can take? This is the max target you can take. You can see there is more resistance, and then these resistances are very high. So, of course, a lot of sellers are going to be here. Okay. A lot of sellers. And in fact, the sellers, just came in from right here. And the reason behind this is, you can see there is a liquidity level here as well, right? And the price moved from just around this area, and which is fine. A lot of times it's going to hit your stop loss, but the case is you want to have a good 1:2 without much interruption. And if you have interruptions, if you see a lot of liquidity areas in between, you don't enter the trade. And how do you see that liquidity areas? You will find that in my upcoming videos. So our course has just started. There is a lot more content coming in. I mean, I don't have a end limit of how many videos I'm going to make, but this course is going to be big. So we saw a range right there. Now let's see if we can find more ranging areas. See how this support works. And I like these kind of support areas because it's very easy to take trades from these places and for longer periods. Imagine taking a trade from right here. I know this is not related for the video, but anyway, anything is education when I'm talking about charts and trades. Imagine what kind of trade can be taken from here. You see a lot of rejections, and if you draw proper support and resistance lines from around these areas and then try to see a retest and buy, you will find really nice risk to rewards from right here and also right here. See, there is a change of structure and then a low, and then the price moves nicely up here as well, even though the price is moving with a lot of consolidation. But it's a nice way to buy, and there is a trend. Look at this. There is a trend right here. Imagine how many times you could have bought from this place. And this was June 25. So this was very near. Now there is a range right here. Now imagine how many times you can buy from a place like this. Why do you want to be in any other trade? Just create this as your support line. So trends are also a support line, and wait for price to come here and buy. That's it. It's as simple as that. Wait for price to come here, let a 4 hour candle get closed and then buy. I hope I am able to make sense of what I'm teaching. And if you are like not able to understand, just let me know in the comments. I'll try to make another video or something like that. I'll see what we can do. So a lot of price action and yeah, see there is a trend right here. A lot of trends, so many trends happening right here. You just need to keep an eye and look, look from a distance. Don't try to zoom in and look at it. So when you look at the chart from a distance, you get a clear perspective. Imagine how many times you can see. Now, when I look at the chart like this, let's look at it at a zoom level. Now we know there is a trend line here, right? We know there is a trend line here, but how would you see it? Imagine, look, you are looking at the price like this, right? You are able to see there is resistance. Oh, there is resistance, yes. But to see a trend, like this, you're not scrolling like this, you're scrolling like this. You can't see that trend, right? Now, even if I do this, you can't see that trend. You're seeing a lot of support resistance, like your eyes can't catch it. But as soon as I do this, now you see a trend, a support trend moving like this. You try to make lines, you'll see another resistance from here. You'll see more resistance here. So this is the way you do it. You have to look it from a distance. You have to make sure you're zooming out and looking at. I know I'm saying this a lot of times, but it is important how you look at the chart. To catch range, to catch trends, you have to zoom out and then look. When you're looking at a higher low, higher high, all these levels, at that time you zoom in. But to catch this stuff, you zoom out. Now, I guess this was a very comprehensive video. I don't have another range example, but if I find something, this can be also taken as a range. Okay, let's look at this. Now you have a support line right here. This is a 4 hour support line again. Now you have a, I mean, good. Okay, this is one. This is two. Yeah, this is two. So this is a second resistance line. So the price right here did a lot of movement, tried to break out, but it was not breaking out. And finally, you see a rejection right around from this area. You see a really nice break. So you see one breakout, and the problem with people is they see a structure coming here and they'll sell. But I'll tell you why this place is telling you that now it's time to sell. You see a lower high, a lower low, and mostly I would say this is a lower high and this is the lower low for simplicity. And now these market structures, nothing has broken this lower low again, right? Nothing has broken this. And there is structures here. If there is structures here, I want a clear rejection. This is how price action works. You want to see the price when there is a breakout. You want to see the price to reject from the previous support, now resistance line. And you want to see create a new lower low. A second lower low is required. A second lower low is required. And to get a tighter stop loss, what you do is, if you don't have a tighter stop loss right here, you have to wait for another structure to be formed and then you see an entry signal. This was confluence for second lower low, and now what happened is, for at this place I can't see a tighter stop loss at any point. So it's going to take a lot of time for me to gain some profit. So what I do is I wait for another structure, a lower high to be formed. Okay. This is my strategy. I am waiting for a lower high to be formed. And what I am waiting now is that the price to give me a really nice entry signal, a beautiful entry signal. And that's when I sell, covering the high of the recent structure. covering the high with a little bit of distance, and that's it. That is all I'm looking for. Now, right here, if you see, the low was broken. The wicks, there are so many wicks, but I want a body close. There's no body close right here, but there is a close, like this angle has been formed right here, and there is a nice entry signal. You can see this is an engulfing candle, right? Like when the market came back, there is only one good engulfing candle. Then there is this second engulfing candle, and there is this third. But this is the first engulfing candle. It's closing nicely on the smaller support area. You can see the bottom is this. A lot of rejections has happened around this area. Previously, the price was not closing below around this level at all. And now you can see there is rejections here as well. But this candle closed nicely below, on this support area, and this is a very good entry signal. Now what I have to do is I have to put my stop loss like this. This is the high 96.5, and I cover myself like this. Now on different time frames it works differently, and this price might go for a very long duration. Like this started at Wednesday 29 Jan, and this is going on till its next week. Actually, more Wednesday, Thursday, Friday, yeah, next week, yeah, Tuesday, and yeah, in 1 week, you're getting more than 1:2, and that is what swing trade is. And it doesn't matter how much time it's taking. Your goal is to make money, and that is it. My target would be, so this, of course, can't be my target, and I would look for a target like right around here, or maybe right around here, max, because there is a lot of liquidity coming from here, right? And if I'm here, I'll just cover till here. So I covered this as well. And now I got a 2.42, which is completely fine. And I'm happy with what I got, because I want is minimum 1:2. And I'm getting 2.4, which is fine. And it's happening in 1 week, which is a swing trade. And it's a really nice price action. So this is what you're going to learn in the upcoming videos. I'll be talking a lot more about such trades and how to identify support, resistance, and everything, right? And you will see more videos on drawing trend lines and everything. You will see this in my analysis videos as well, which I upload every Sunday. So you should watch all of those analysis videos, because in every video I say this, that a lot of educational content, this support lines and everything, I draw on those videos, right? So watch those videos. That is very important. You'll get a lot of information, what kind of price action I'm looking at, right? Watch those videos. Join me on Telegram for midweek updates as well, because there I am providing some kind of content, right? Some kind of information every now and then. I'm going to increase that as well on Telegram. So join me on Telegram. And so I think we covered a lot in this video. We saw trend lines and how to catch all of these trades. We actually went further from the goal of this video, which is completely fine. You got a great deal on how to catch these trades, how to use your lower lows and lower highs, which you recently learned in my previous video. So there will be a new video. The topic I am yet to pick, but we are advancing in this course, and we are from what we started, what is price action, to how we are drawing trend lines and how we are taking trades. All of this has been taught, and I hope it's easy to understand. So I guess this is it. Thank you for watching. Make sure you subscribe so that I can upload more videos like this and completely for free. Thank you for watching again.